They were projecting 3 hikes at the December FOMC meeting. That was the median expectation. Our expectation is 4 hikes this year, so that's not a huge gap. Some time has passed since the December meeting, 6 weeks basically. I think their thinking is probably around 4 hikes as well, based on what we've heard from different FOMC participants. So I don't think, in my baseline outlook, they're not far behind the curve, but it's time to get going with the monetary normalization, both as far as interest rates are concerned and as far as the balance sheet is concerned. But I would expect them to do that this year. And
with that
at the March meeting, first hike at the March meeting, and then balance sheet runoff starting sometime after that, maybe in the middle of the year.
With that in mind, Jan, could the Fed go by 50 in March?
I think that's highly unlikely. Highly unlikely. I mean, if they wanted to do more than 25 and then again 25 3 months later, I think they would go probably another 25 at the May FOMC meeting. That's currently not our expectation, but I think that the hurdle for that is not so high. That is quite conceivable. A 50 basis point hike, especially a 50 basis point hike to lead off the tightening cycle, that would be pretty extreme. Even back in 1994, a long, long time ago, most aggressive tightening cycle of the last 30 years, they started off with 25, even though they ultimately accelerated. So I think it's very unlikely.
Jan, Will here joining in from Singapore as well. Just in terms of the aggressiveness that could potentially be coming from the Fed, do we run the risk of recessionary conditions because of how hard they might need to go? And every time we've had inflation at these elevated levels on a core level, we've seen a recession in these tightening cycles.
I mean, I do think the risk, of course, increases that, you get a sharper slowdown and maybe even a downturn in activity if you are more aggressive. So as you move in that direction, I think it's the right thing to think about. My expectation, though, is that we're going to go from very far above trend growth rates to modestly above trend growth rates in 2022. And the goal is going to be to bring us down to, more trend growth pace, 2% or a little bit less than 2% growth, with a sort of flattening out of the unemployment rate. That is my expectation. Of course, it's not always going to look like that, because there's a sizable adjustment that will need to come, and that is always that always means some risk. But my expectation is a slowdown to trend growth, not a recession.